Hello, hello, hello. What time is it today? It's 11:30 a.m. It's time for coffee and conversations with Melissa. It's a live stream from my for Facebook, which is my personal page, which is Melissa Tabo Educas, my women's organization, which is Women in Business Social Networking, my Coffee Connect, Coffee and Conversations with Melissa, plus in YouTube, Coffee and Conversations with Melissa in YouTube, all at the same time. How cool is that? I am Melissa Ducas. I'm the founder and CEO of My Coffee Connect. It's a virtual quality connections for business to business. I am so excited to introduce to you one of my Coffee Connect attendees and an awesome business owner. Let me tell you about him. Marvin Smith II was born and raised in Brooklyn, New York. He graduated from LaGuardia College, earning his degree accounting. Over the past 20 years, he has worked in the field of accounting and bookkeeping. Marvin has worked in many industries throughout the years. He has the pleasure of collaborating alongside some of the best accountants in the Philadelphia metropolitan area. He takes pride in serving clients and being an educator. He looks forward to providing the best customer service, working hard to put all the clients' needs first and foremost. Ladies and gentlemen, please welcome Marvin Smith.
Thank you. Thank you.
Yes, we are going to talk about business day-to-day financial record keeping. So first thing first, tell us your why. Why did you do what you do?
Well, the reason why I do what I do is I like to, one, interact with customers. Number two, I like to educate customers because there are many business owners out here as far as entrepreneurs, startups, mid-sized business and big business, even investors. The joy that I get out of that is interacting with them, getting the information and the knowledge that I can provide to them. And what I understand is that many business owners themselves, they need help. So what is that help? When I sit down with a client, I do what they call a diagnosis. That diagnosis comes with me sitting down, understanding what their needs and what their wants are. And once I have all that information, I'm able to now customize it, put it into a package, put it into writing, and this allows them to see what they're getting in return.
That is awesome. So you're doing bookkeeping and you're an accountant, correct?
Yes.
So what is the importance of bookkeeping?
Well, the purpose of bookkeeping is everyday record keeping. So let me give you an example. Every business they record daily transactions. Mm-hmm. Those transactions are what? One, income, where they record incoming checks, incoming wires, incoming ACH deposits that they receive from customers. And the second component of that is what they call operating expenses. That's the cost to do business. Mm-hmm. So that could be utilities, rent, office supplies, payroll for employees, payroll taxes. You have advertising and marketing, professional and legal fees. Mm-hmm. So you have money coming in and money going out.
For me, I don't keep receipts. I just do. I swipe. I always swipe, so I have a record in the bank. Is that safe?
Well, with that said and done, every month, you should print out your bank statement or your credit card statement and go through every line item and mark off, is it business or personal expenses? So many people, what they do is, one of the major mistakes that many business owners do is they co-mingle their funds. Co-mingle means you're mixing business and personal expenses together, which is incorrect.
And speaking about bookkeeping, I love fashion. I love clothes. Right. I have the wrap up clothes here. Right. And I print my company. Right. In this. Like I have my Connect Women in Business in there. Can I write this for my business expense?
Yes, that's called advertising and marketing.
Yes, that is good because I said, ask your accountant because I know I can write this up because I put my company in there. Right. Okay, that is awesome.
So I go a step further. If you put your business name on your pens, coffee mugs. If you put any advertisement on your car, that's called advertising and marketing, because what you're doing is you're advertising your business.
Wow, that's a picking a lot nuggets to the so if you put any companies to anything that you own, it's
Yeah.
oh, that
Yeah.
is good.
Right.
That is good to know. Oh, we have a guest here. Hello, Trish Fogarty. Good morning to you too. If you have any questions, just give us a holler. And let's talk about the what did I ask you this morning? Business. What is that? I forgot.
Business credit.
Business credit. Yes.
Right.
What is that? Can you explain that? What is business credit?
Well, business credit and personal credit is two different things. Personal credit deals with personal credit. So in personal credit, you have what they call a personal credit score from 300 to 850, right?
Okay.
Then you have what they call business credit, which comes from Paydex, which is from 0 to 100. So the lower your credit score in business is, the lower the risk. The higher the score in business credit means that what? Higher the risk. So Paydex, what they do is what they call terms of credit. So I'm gonna give you an example of companies that report business credit. One of them is called Quill. So Quill is office supplies, and what they do is they give you terms, and when they extend terms to you, that means credit terms, which is 30 days, 60 days, 90 days. So if you pay back within 30 days, what they do is they report it to what? Dun & Bradstreet, Equifax, and Experian. But every time you go to Quill, or let's say BP Gas, Wawa, anything over $500, they have to report it to either Dun & Bradstreet, Equifax, or Experian.
So how can you do the score? The score, how can you?
Well, first of all, what you have to do is get a DUNS number.
Get a what?
Dun & Bradstreet. It's a 9-digit number. So this is where Quill, BP Gas, let's say you have a Wells Fargo secure credit card, maybe Staples, Summer Office Supplies. So these are companies that report to Dun & Bradstreet. And Dun & Bradstreet, what they do is they keep a credit profile of your business. Okay. Now, also with that said and done, when you establish business credit and you take out a loan, now there's two things. There's something. Let's say you have an LLC and you're going for a loan. Now, there's two ways that the bank will guarantee the loan. There's something called a personal guarantor, which means you're personally guaranteed to pay back that loan, or you can do what they call a corporate guarantor. A corporate guarantor means that the business is responsible for the loan. And that's based off of what? Information that they get from any entrepreneur will be the financial statements and how well, in terms of what they pull credit reports from your business profile. Once you establish that, and by establishing that, you have to have accounts with Quill, is one of them, Summer Office Supplies, BP Gas, WEX, which is Wawa, Exxon, which is Wawa. So any company like Sunoco that reports to Dun & Bradstreet or Equifax.
So business credit is a credit score for the businesses.
Yeah, 0 to 100. Now here's the advantage. With business credit, when you do an inquiry, with a soft pull or hard pull, it doesn't go on your credit report. Now with personal credit, you know that you can match that through Credit Karma or NerdWallet. Anytime you go for, let's say for example, you're going for a mortgage, or if you're going for an auto loan, or if you're going to AT&T for cell phone service, you're going to ask them, is this going to be a hard pull or a soft pull? A hard pull sells your credit report for 2 years. A soft pull does not sell your credit report. And if you're able to do it through a business credit, you do it through your tax ID number, which is a 9-digit number. And then what they'll do is they'll look at the business credit report, and the business has to be in business for 2 years or more.
Yeah. Is there any situation that a certain, like, her credit is good personally, but her business is bad?
Well, 9 out of 10. Is that right? 9 out of 10. Any entrepreneur that's starting up, it's very important that your personal credit score and your personal credit is in good standings, because 9 out of 10, any loan that you take, they will always ask for your social security number.
How can you achieve the good business credit? How can you achieve that?
So I'm gonna give you an example. I have an account with Quill, one of the office supplies. Mm-hmm. So what I do is I order office supplies on a monthly basis, and then what Quill did was they extend me credit, which is called terms. Terms of credit. So they allow me to pay it back in 30 days. If I pay it back within 30 days, what happens is there's an app called NAV, N-A-V. Now they're going to report that to Dun & Bradstreet. Dun & Bradstreet is a business credit profile that you can get a 9-digit number, like a tax ID number, and it's for free when you sign up.
Wow, that's a very good nugget. See, I didn't know that. So that is good. Thank you, Marvin. Oh, we have a guest here again. Hello, Bongay. Hi, Marvin. Great seeing you guys.
All right, all right.
Hi, Trish and Bongay. If you have any questions, give us a holler. So, hoping that Marvin can answer. Hopefully, he will answer it. He's good in what he does. So, what are the things we need to know for to be ready for everybody hates it when the tax season is coming up. So what are the things people need to do to get ready for the tax season?
That's a very good question. And I'm glad you asked that.
Yes.
Here's the thing. The only time people go to do their taxes is between January and April. So for example, the only time people go to the doctor is when they're in pain or have a toothache. So that's what you should go to what they call a tax planner. You should be planning your tax strategy at the beginning of the year from January. You should not be walking into your tax accountant to file your taxes. That's the first thing. Number two, you need to understand the tax laws, tax credits, and tax deductions. So by having a tax planner is planning you on how to maximize your tax deductions throughout the year to minimize your tax liability. The reason why people owe money is because what? One, they either prepare their own taxes, which is incorrect. When you start to make a certain amount of money, 100,000, 200,000, 300,000, going into the millions, you should not be on TurboTax. You should not be going to H&R Block. You should be going to a tax accountant. Why? Because the tax accountant is going to have what they call tax planning. You're going to go to the beginning of the year, and with the planners, they're going to give you a strategy on how to take advantage of all the tax credits that you have. So I'm going to give you an example.
I was about to ask you, what are the tax credits? That is what I want to know.
Okay, here in Philadelphia or Pennsylvania, there's something called WOTC, which stands for Work Opportunity Tax Credit.
Okay.
What does that mean? If you hire an ex-felon, if you hire someone who has a disability, if you hire a veteran, if you hire summer youth employee, if you hire someone that's on public assistance, if you hire them, the government will give you a tax credit. These tax credits are incentives for small business to create jobs. So now if I hire an ex-felon or someone from a veteran, what I do is I will get $1,000 per credit for every employee. Every credit reduce your tax liability dollar for dollar. And I'm going to give you an example. Walmart does that. When you go into Walmart, you know that majority of people are handicapped.
Yeah.
Right?
Oh, that's a good one.
Right? So by doing that, Walmart gets tax credits.
Huh.
So it's called Work Opportunity Tax Credit. You can go on CareerLink. The other one is called On-the-Job Training Tax Credit. What is on-the-job training tax credit? If you hire someone that's on public assistance or they're trying to get back into the workforce, if you go through CareerLink, which you can sign up for, if you bring this person to your business establishment and you train them, the government give you what? Tax credits.
Wow, that is good to know. So this is the problem sometimes of the business owners. They're afraid to get employees. So instead of getting employees, they're having contractors. So give us the pros and cons of the difference between employee and contractors.
Okay, the first thing is the reason why people give out benefits is
Yeah.
to attract new talent.
Yes.
Right? So the older you are, you're more concerned about the retirement. So you're looking at a 401k, you're looking at health insurance. When you're young, like we was when we first started out, all we cared about making money.
Yeah.
So you have two components. You have an employee, which you give them a W-4. These are called W-2 employees. So with an employee, the company is now responsible for doing what? Submitting their federal and state taxes. So the employer has employees when they're going to hire, they're going to pay their taxes. They're going to give them health insurance. They're going to give them PTO, which is paid time off, which is vacation, sick time, holiday time. There's other incentives. There might be bonuses. There might be employee profit sharing. So these are different incentives that the employer, when he takes on an employee, is responsible for. If he lets go of that employee, now that employee can now file for unemployment. Now, the second part is called contractors. Contractors does not work for the company. However, any contractor that you should have what they call a contractual agreement. In that agreement, they say that what? All contractors are responsible for what? Their own insurance. They're responsible for paying their own federal, Medicare, and state taxes. That has to be written in the agreement. One. The other component is when you're paying a contractor, you're not withholding any taxes.
So there's a question here.
Right.
Bonggai, does the tax credit apply to nonprofits? Say I get a college student or veteran or a disabled person. Do I have a tax credit as well?
Yes, because what I would tell you to do is look into the WOTC, take advantage of these tax credits, and see how they will apply to your business. And when you take on these tax credits, what's going to happen is at the end of the year, it's going to be, if you have a tax liability of $12,000 and you took on 12 employees and they gave you $1,000 a piece for each employee, that's going to zero it out dollar for dollar. So you're reducing your tax liability.
Wow, that's a good nugget, Bonggai. So that's a good nugget. So tell us more about the things that we need to do to be sane in tax season.
Well, I think every business should have a couple of things on hand. Part of your staff. One, you should have an accountant. You should have a tax accountant, a lawyer. So what you need to do, number one, you need to make sure that you have recorded every day, you have recorded all the business transactions, whether it's income or expenses from January, day one. So it's very important that one, you have an accounting program that allows you to record the day-to-day transactions. Number two, which should be number one, you should never take on the responsibility of doing your own books. Why? Because me as an accountant, I cannot be a surgeon. I'm not a brain surgeon. I'm an accountant. So one of the major mistakes that many business owners do, entrepreneurs do when they first start out, they call themselves, I call creative accounting, where they create transactions and they're wrong. So it's very important that if you can't afford an accountant or bookkeeper, you can do what they call consultation, where now you can have them on a retainer and quarterly you can sit over the records and have them review it and make sure that everything is recorded properly.
Yes.
So as I mentioned, record all your transactions, put them in the accounting program, for example, like QuickBooks. And then once you have all your information recorded, always keep copies of all your receipts. Any clients that you're billing, you want to create invoices. And when you receive payments, make copies of all checks, attach each invoice, file it away. And then the reason why this is so, because if you ever get audited, you have to have what they call a paper trail. All your invoices. If you get checks, make copies of those checks, attach it to each invoice, mark paid, take another set of those copies of check, attach to the daily deposits that you get.
Yes.
File it away. So now if you ever audit it, and I said we want to see all your gross receipts. Your gross invoices and deposits that you receive, and now proper record keeping means filing and proper record keeping.
Yeah, this is the reason why I really just close my eyes, paying my accountant to do everything for me. They do my bookkeeping because I don't want to mess up on this one. And a lot of people like asking me if they can pay cash. I always say no to cash because I said I wanted a paper trail because like it's protection for your business too. You know, like I want everything in records, every
Right.
paper trail because it's like I can only do PayPal or checks. So
Right.
because it's recorded, you know, I want a paper trail. That's the most important for bookkeeping.
I agree.
You know. So
Right.
that's why I am discouraging people to pay me cash.
Right. You have to pay by PayPal.
Yes, PayPal or something. Soon, probably, I'm just gonna get this Venmo. I don't have Venmo, so can you use that for tax? Venmo? Do they have a business for Venmo?
Well, what happened is when you use any third party like PayPal, Venmo, Cash App. Now, I don't advise you use Cash App.
Yeah.
And there's a reason why. At the end of the year, there's so-called a 1099-K.
Okay.
What is a 1099-K? A 1099-K comes from any third party that collects sales.
Yes.
And you get this at the end of the year. It's like a 1099 miscellaneous that you will also show how you pay out your contractors.
Mm-hmm.
Every PayPal, Venmo, Cash App. I know PayPal Square does it.
Yeah.
You can go online and print out what they call a 1099-K.
Yeah.
Any merchant that you use to collect either debit or credit card sales, you could do what they call it, print out a 1099-K. Now, some people try not to report this type of income. Do not do that. What's going to happen, even if you don't report it, these merchants will report it.
Mm-hmm.
And you're going to report that information.
Yeah.
So it's important that what? I don't advise using Cash App because one, I want to be able to print out financial reports.
I know, right?
Right.
Yeah.
So you should use PayPal.
Yeah.
PayPal and Square allows you to generate invoices.
Yes.
When you send it off, there's a link that tells the customer when they follow the link, they can make a payment.
Yes.
So when you own a business, you should not be using Cash App.
Yeah.
You should be using PayPal or Square, which allows you to create invoices.
Venmo doesn't do invoice?
I have to look into it, but I use PayPal as another source.
Yeah, me too. PayPal, just PayPal. I just PayPal. I don't have anything.
It's a trusted brand.
So you have a question here. Trish Fogarty, crazy questions. I'm a nurse and busy scrubs. Can this be included in my tax?
Yes. Now, two ways. Now, there are some jobs where what happened is they will reimburse you for out-of-pocket expenses, right? So now, when they reimburse you for out-of-pocket expenses, this is not included in your gross income. So it's an expense to them, but it's not included in your gross. It's a separate check. Okay. Now, if you have a profession that have out-of-pocket expenses like nurse or lawyer, once you keep all these receipts, the so-called business expenses for employees at the end of the year that you can write off. So for a nurse, there's scrubs. There might be, for example, laundry, linen. Mm-hmm. Some places have, if you buy a pair of shoes that's associated with being a nurse, you can write that off. But you only write it off if they don't reimburse you back. But you can't write off at the end of the year. It's called business expenses for employees.
Mm-hmm. I don't know what's the point of this. Like, I just found out about Givelty too. They will automatically send out reports to your donors or anyone who gave. Is that true?
I never dealt with them, but what I'm saying basically that what you have to take into mind, these companies that you use for third parties, they're going to report this information. If you don't report it. Why? Because now when during the economy, many states, as far as the federal, state, and local level, they need to recoup some of this cash. For example, like the gas prices is going to be raised up. Why? Because there was lost revenue through COVID-19 because what? People was not driving. For New Jersey, they raised up the gas tax to recover the revenue that was lost because people was not driving.
Wow. So we get to know more about what you do, and we got a lot of nuggets. So it's time for us to give back to you. Can you tell us what are the three good referrals for you?
Oh, construction, retail, and restaurant.
What? What else?
Construction,
Construction
companies, restaurants, and retail.
and retail. Will you consider MLMs?
Say that again?
MLMs, multi-level marketing.
Yes.
Okay.
Any business that has currency.
Bookkeeping.
Any business that has currency.
Okay, that's good. It seems like anyone who has a skin. That is good. That's a good tagline for you. So tell us more about you. Like, if your business gives you joy.
Yes, my business gives me joy, but I'm going to be truthful. There are days that my business gives me joy, and there are days that you're going to go through headaches.
Yeah.
So I would say that the main thing is one, believing in yourself. Whatever you believe, you put out to the universe, is going to show back up to you. So the greatest gift that you can give yourself is believing in you.
Yes, yes. And probably your clients love you when they receive the tax returns. Oh, look at this.
If you go to my website, you'll see all my reviews.
Yes, go to his website, and if you are looking for bookkeeping, you can connect with Marvin. So Marvin, how can they connect with you if they want a bookkeeper or want your services?
Okay, so you can email me at msmith at S as in Sam, B as in boy, F as in Frank, S as in Sam, LLC.com, or you can call me at 215-745-2713. And you can visit my website, www.sbfsllc.com.
That's good. And then you can comment on this Facebook too. In all 4 pages, I will tell you where it is. So you can comment all your information in there. And then what are your services? So they will know how to approach you. What are your services?
Well, the services are accounting, bookkeeping, payroll, tax preparation for individuals and business, QuickBooks consultation, business entity formation. So if you look at the form of LLC, a partnership, a C and S corporation, or limited partnership, I also do that. I also do public speaking.
What's the difference between accounting and bookkeeping?
Well, the accountant is someone that you go visit once a year, right? And the bookkeeper is someone that's
month per month.
Right. No, the bookkeeper can be two things. There's an in-house bookkeeper, which works from Monday through Friday, full or part-time. And there's an off-site bookkeeper who you send the work to. And on a monthly basis, they take all your bank and your credit card transactions and they record it.
Can people hire you? Okay, Marvin, I want you to do the bookkeeping. Boom.
Yes.
Just one at the same time.
Yes.
Probably that's more expensive.
Well, it depends. If you're doing it, when you have a bookkeeper who you hire full-time, and as an employee, you have to think about the cost of the employee.
Yeah.
If you have an independent contract or you're outsourcing it, you don't have to worry about the cost because it's going to bring your cost down.
But what are the things that you need if you are going to do their bookkeeping? What are the things that you need?
Well, the first thing is, one, do they have an accounting program? So if they have QuickBooks Online, they can send me an invite, and now I can look at all their books online through QuickBooks. Or if they have it on a desktop, they can email me the QuickBooks file, and I can download it into my QuickBooks. Okay, so that's one way. The other way is you create what they call a share folder drive. It can be Dropbox, OneDrive, or Google Docs. And you take all your financial records and you can upload them into a share folder drive. I can download it and print it out and record it. Or you can mail it in by FedEx, Post Office, UPS, or you can fax it. But many people don't have fax machines anymore.
So you can offer retainer too, right? You can offer retainer.
Yes. Okay. So the retainer is that what? You are retaining my service for consultation. I have clients like that.
Really?
Yeah.
What do they do for consultation?
Well, the conversation could be what? They only need me if they have questions. So, for example, I have a client that asked me a question about her and her son or a partnership into an LLC. He has 75%, she has 25%. So she asked me to actually do how do I file a tax return? You have to file a tax return, and both of you are given what they call a K1, and that's used on your personal return.
Oh, I have a question for you. What is the difference for filing tax for LLC? I'm S corporation.
Okay.
For the S corporation, what's the most important thing to know for applying for the tax season for LLC and S corporation?
Well, LLC is not a company. It's called an asset protection. So LLC can be what they call a single member LLC, a multi-member LLC, and the LLC can also operate as a C and S corp by changing the tax classification. So with an S corp, keep in mind the rules for an S corp is you file on March 15th. You have to do your business tax first. It's a form 1120S, and you have to go on payroll for an S corp. Now, when you
don't have payroll,
huh?
I don't have any payroll. I don't have employee.
No, you are an employee of an S corp. So the law for an S corp is you have to go on payroll and pay yourself a salary based on the market value of your profession.
Soon I will be. I'm not paying myself yet, but I will.
With an LLC single member, all you do, any money that you take out of the company, you don't pay taxes on it, but it's called member draws. You don't pay tax on what they call self-employment taxes at the end of the year. That's filed on what? April 15th. So that's a 1040 and a Schedule C. So now here's the difference. You should always want to file two separate returns, a business and a personal return.
Yeah.
Single member is one return. But it is more better if you're trying to get loans or advance a business. You're doing two tax returns, a business return and a personal return. It looks more better that way.
Yeah. There's a lot of nuggets that you did today, Marvin. Thank you so much. Yes. And thank you so much, Bongay and Tris, for all your questions and watching us. For you, ladies and gentlemen, if you want to watch us, you just do replay so we will know that you watch it. You can follow me at Coffee and Conversations with Melissa in Facebook and follow me in YouTube, Coffee and Conversations with Melissa. So thank you, everyone, and have a great day. Bye.
Bye.